Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, March the 20th. The year's 2020. Let's talk trading. Walmal method, day 17. Now, traders, just remember, these videos are for educational purposes only, and your results may differ from mine. And that trading's very risky, and you can lose all of your money. So, if you seek trading advice, financial advice, investment advice, seek your advice from an accredited financial professional. That way, if you take their advice and you lose your money, you know you took the advice of an accredited financial professional instead of some guy with a funny name who posts videos on YouTube and Facebook and other trading forums. Okay, disclaimer out of the way. This has been one heck of a week, fellow traders. One heck of a week. The pound has moved over 1,000 pips this week. I'm sure there was fortunes made and fortunes lost. But, we've been doing the Walmal method, and there's something that you can learn from what Walmal does. He sets up his trading hours. Then he has a certain number of pips that he wants to take out of the market per day. I think he wants to make 10 pips per day. Now, sometimes he makes more, and sometimes he does have a losing day, and he has to make it up, sometime later in the week. But the point is, he has a plan, he executes the plan. So the other day, he told me, "Oh, I made 15 pips. I quit." This morning, I got a text. "Oh, I made 17 pips. I went back to bed." You see, once you make the money, that's your money. And I guess he likes to hold on to his money with a tight fist. He doesn't give the market the opportunity to take it back. So, sure, you can look at the movement this week and go, "Oh man, I could have made, $100,000. I could have made $1,000,000. But the thing is, if you let that stay in your mind, you're going to have FOMO, FOMO, fear of missing out, and it's going to mess with you. It's going to mess with you big time. And you're going to get in there, you're going to start to trade, you're going to start to, put your money at risk. And if the market doesn't smile upon you, you're going to lose. So, if you take trading seriously and you really want to make money trading, then you have to treat it like a business. You have to treat it almost like a game where you want to win. When the clock ticks, you know, final gun sounds, or however a certain game ends, you want to win. You don't want to lose. So if there's a way where you can win at the end of the game and you know to walk away, that's all part of the money management side. Most of the time, I really focus on the risk. So you don't lose any more any one particular trade than you're willing to lose. But you see, the money management side is you make that money and then you don't give it back. You pocket it. You know when to pick up your chips and you walk away. And that's just it. You really have to do that, because if you don't, sooner or later you're going to get your fingers burned. So let's take a look here. As you can see from the week here, 670 pips below the weekly open. But look at that, 326 pips off the bottom. If anybody was playing the weekly rat zone, which is the same as the daily, on that one particular day that made the low for the week, you could be sitting pretty. Very pretty. Once again, yes, actually today we made a new low, 1409. What just happened? Huh. I don't know what that is. Something strange has just happened here, boys and girls. I have no idea what this is. Let me pause the video. Oh, it just went away, I think. I don't know, maybe my screen capture program put in a new function, but that was weird. I haven't seen that before. So we put in a new yearly low today. And but we moved up. So anybody trading the wick zone would have been rewarded handsomely, that's for sure. You can see nowhere near the opening range, nowhere near the inside bar. But these ranges are crazy. Only one pair under 100, but look at these others. There's just so many pips to be had. But once again, you have to follow your plan. Buy zone traders were rewarded trading towards the pivot big time. Red rats. I don't know if you took advantage of that right there. Um, I know I didn't trade this morning. Um, I did take a look. It was over 119. I should have, could have. Harry hindsight short at the 119 triple O level would have paid off handsomely right now. I hope somebody out there did. Once again, all you have to do is look here at the wicks. Even on the, doesn't even matter what chart. We hit R2. See, we took out the pivot once again. Took out the daily. Now, what I'm interested in on the pound is this weekly pivot that's going to come up for the new week. That's going to be interesting, that future pivot, if the pound will hit it. As you can see here, the pound's pretty good at hitting pivots. There's that lower wick zone. Even went out of the upper. And back to the simple Walmal method here. Let me move over to this chart. These ranges are just really crazy here. They really are. Let me widen the chart here. And you can see here there was a trade to the south side worth more than 5 pips. Now, once again, if let's just say you want to make 10 pips a day, so you want to maybe get 2 trades of 5. So when you come out and you do this the first time, you have a choice. You could wait till the next hour, do something else, study the chart, look for places where price may or may not turn. Or you could take your chances and do it again. But see here, if you did that, you can see, notice it didn't make a new low. And right now, the way the market's moving, I know my connection, for some strange reason, it's my fills are taking a lot longer. In fact, I got slipped about 10 pips on a trade yesterday, but I was up big time, so it didn't hurt. But I mean, if they slip you 10 pips, that could, especially if you're trying to lock in 5 pip profit, that profit just became a loss. So you have to be really careful here. Um, Now there was a trader out there. They were asking a bunch of questions, and my answer to every question was, you have to read the price action. Let me kind of clue you guys in on what I mean by that. You can see, is price ranging or is it really moving? Now, you know how I talk about the big bars and how, like, this was a big, this is M1 now. This is a big bar for the minute. And you see right here, I say usually price is going to return to the open of a big bar. So it happened here. See that big bar? See it happen here. And there's that, it was this, now this big bar here, right around the 1800, $1.18, it hasn't been hit again. So that's something to look for. See this big bar here, right below 1770? This is something to look for. So That's part of reading price action. You look for lower lows and higher highs and things of that nature. You look at how the range is moving. You see here it went up 171 or had a 171 up, and here's a 174 closed down. Those are huge ranges, huge. And so far this hour, only 37. But what I really wanted to convey today, though, is once again that fear of missing out. You don't want to fall into its grips. And right now, this is the perfect opportunity for traders to do that, trying to go for those 100 pip or more runs. But that's okay if that's your plan. But if you're trying to do the Walmal method, that's not the plan. A lot of traders are saying that they're not making any pips. Well, once again, it's not designed to make a whole bunch of pips. And as Walmal stated, if you take the trade and it's moving against you, 3-4 pips, you need to get out. I mean, let's just say the pound usually has a 2-pip spread. So when you open the trade, you're down 2. So if you find yourself down 5, 6, or 7, you might as well get out, because it's easier to recover 5 than it is 10. Because think about it. If you're having a hard time making pips, the worst thing for you is to make it so you have to work your way or trade your way out of a hole. Because if you're not trading yourself, if you're not building, you're digging a hole instead of building, your account up, then you don't want to dig fast. You dig slow. So right here, I said read price action. What did price do right here before? You see here, it came down, and right here, it actually closed below the line, but then here closed once, twice, and then here it shot up. I mean, that's reading price action. But this isn't a Walmal trade, but this just gives you an idea what you'd be looking for to say, okay, and kind of clue yourself into what could possibly happen next. Yeah, price could go up, price could go down, but based on, recent history, what has price done at this level? And, that's why I created this new statistic here, statistical indicator, because I want to know when it's between these two lines. Here you got more above than below, and how many close between. This is just on the 1-minute chart. 480, that's 16 hours, okay? No, I'm sorry, not 16, that's 8 hours, because 240 is a 4-hour bar. And so I want to look at basically a session's worth of data, since we have 3 sessions about 8 hours. So we can always be looking back over the past 8 hours to see what was price doing. And so when it crosses this line, these numbers will change. It'll say above 1740 and below 1730, and you can see what price has done. And of course, those are all inputs. And this is going to be the TRO 2020 above, below, and between. Now, the old above and below indicator, do I even have that on a chart here for you? No, I guess I don't. I had that up, but I realized we really need to know, or it could be helpful to look at what's between, but you don't really need any of these indicators at all. You can just you can just look at the horizontal lines. That's all you need. I've said that many times. All you need to trade is horizontal lines. The rest of this stuff is just to give a slight edge. But fellow traders, I really hope you had a profitable week, because it's been one heck of a week. You saw those ranges. But just remember, when you come back to trade, it's not what you trade, it's how you trade it. So go out there and drain the banks.